All right, today we are diving deep into one of Europe's biggest ever corporate frauds. This is the incredible story of Wirecard, a company that was celebrated as a tech giant, but as we're about to see, was really just a house of cards built on a colossal 1.9 billion euro lie that sent shockwaves through the entire global financial system.
So this is the big question, right? How on earth did a company, a supposed national champion in Germany, manage to basically invent billions of dollars out of thin air? And more importantly, how did they fool some of the smartest investors, the government regulators, and one of the biggest accounting firms in the world for more than 10 years? To really get your head around the scale of this whole thing, you gotta start with the numbers. At its absolute peak, Wirecard was valued at a staggering $30 billion. This wasn't just some random startup, it was seen as a true titan, a symbol of European innovation. And then there's this number, 1.9 billion euros. This is what it all comes down to. This was the amount of cash the company swore it had, just sitting there in overseas bank accounts. Cash that, as the world was about to find out, was completely 100% made up. You have to understand, before this all came crashing down, Wirecard was the absolute darling of Germany's tech scene. They were pitched as the future of digital payments, this amazing company that was running circles around the old, stuffy banks. They were supposed to take over the world. And if you want proof of just how legit they seemed, look no further than this. In 2018, Wirecard got the ultimate seal of approval in German business. It literally kicked a major bank, Commerzbank, out of the DAX. That's Germany's equivalent of the Dow Jones. Think about that symbolism. The new, flashy tech company displacing the old financial guard. It was a huge deal. But while pretty much the whole world was cheering them on, a small team of journalists over at the Financial Times started noticing that something was off. The numbers just didn't seem to make sense, and they started pulling on these little threads that would eventually unravel the whole thing. And the lead reporter on this, Dan McCrum, he put it perfectly. He saw it less as a clear-cut case of fraud and more like a giant, complicated puzzle that needed solving. He noticed that all the company's profits seemed to come from these mysterious business partners. But weirdly, the cash from those partners never actually seemed to make it back to them. It just didn't add up. Okay, so here's the trick. The whole scam hinged on this one concept they called third-party acquiring, or TPA. The story was simple enough. In places where Wirecard didn't have a license to operate, they'd team up with a local company. That local partner would handle the payments and then, supposedly, hold all that cash in a special, secure bank account called an escrow account. This was the shell game. And on paper, the process they laid out looked totally legit. A customer pays for something, the local TPA partner processes it, the money sits safely in escrow, and then the profits get sent back to Wirecard. It's clean, simple, plausible. And this was the story they sold to their auditors, Ernst & Young, year after year. But here is where the whole official story just completely falls apart. When the Financial Times actually sent a reporter to the Philippines to check on one of these key partners, a partner that was supposed to be handling huge amounts of money, they didn't find some sleek, high-tech financial office. Nope, they found a small office shared with a local tour bus company. It was the first real, undeniable red flag. So as these journalists started getting closer to the truth, Wirecard's reaction was, well, it wasn't just to deny everything. They went on the attack, and they did it with a level of aggression that absolutely stunned the financial world. And I'm not talking about a strongly worded press release here. We're talking about some serious, movie-level stuff. They unleashed private investigators to follow journalists. They hired hackers to go after anyone who criticized them. And in maybe the craziest twist of all, they brought in the former head of Libyan intelligence to dig up dirt and try to scare them into silence. And here is where the story takes a truly mind-boggling turn. The counterattack actually worked. Instead of going after the company with all the red flags, Germany's main financial regulator, BaFin, did the absolute unthinkable. They were so desperate to protect their national tech hero that they actually launched a criminal investigation into the reporters who were exposing the crime. They accused the journalists of manipulating the market. Just look at this timeline from 2019. It shows you how intense this whole thing got. Every time the Financial Times published a new expose, the German authorities would double down, protecting Wirecard and attacking the press. It was a complete and total failure of the system. But the truth, it has a funny way of coming out eventually.
Because despite all the threats, despite all the intimidation, the journalist just kept digging. And eventually, the pressure on Wirecard got so intense that the company had to do something, which, ironically, set off the chain of events that would destroy them. So Wirecard, in what has to be one of the biggest own goals in corporate history, decides to hire another top audit firm, KPMG, to do a special independent audit. They were so arrogant, so sure they could fool everyone, that they thought this would be the thing that finally shut the critics up for good. It was a massive mistake. In April of 2020, KPMG released its report, and it was a bomb. This one line says it all. They basically said they couldn't find any proof that the money was real. They couldn't verify the bank data, the documents looked fake, the money trail just went completely cold.
That KPMG report was the straw that broke the camel's back. Now that all of this was out in the open, Wirecard's longtime auditor, Ernst & Young, was totally trapped. For years, they had looked the other way, but now they had no choice. In June 2020, for the first time in over a decade, they refused to sign the company's books.
And that was it. The game was up. A few days later, Wirecard put out a short, simple press release that will go down in history. They admitted that the $1.9 billion, the cash that was supposed to be in those accounts, well, in all probability, it did not exist. That admission kicked off one of the fastest and most spectacular corporate implosions we have ever seen. I mean, just look at this chart. On June 17th, right before the news hit, one share of Wirecard was worth 104 euros. 9 days later, it was worth about €1.25. $30 billion of value just gone, evaporated in a little over a week. And the consequences for the main players were huge. The CEO, Marcus Brown, was arrested. The COO, this shadowy guy named Jan Marsalek, just vanished. He's now one of the most wanted men in the world. And the auditors, EY, and the regulator, BaFin, they faced total humiliation and were forced into massive reforms. And the ripples from this thing are still being felt today. It was a massive embarrassment for Germany, forcing them to completely tear down and rebuild their system of financial oversight. It also put the entire global auditing industry under a microscope. And, of course, the story was just so wild it became a bestseller and a huge Netflix documentary. In the end, the Wirecard story isn't just about one crooked company. It's really about the failure of an entire system. The auditors, the regulators, the investors, who all chose to believe a really great story instead of looking at the hard facts. And it leaves us with a pretty terrifying question. If a fraud this massive could hide in plain sight for so long in a country like Germany, how many other time bombs like it are still out there, just waiting for someone to start asking the right questions?
So while markets rise and fall, systems like this quietly move billions behind the scenes, hidden from the public, hidden from scrutiny, and sometimes hidden from the law itself. Because in global finance, the most powerful forces are rarely the most visible. And this is just one of the systems used by the unseen elite.